The month of July was all sunshine if you're a U.S. equity investor. It's Markets with Megan, and this is Thursday, August the 7th. If you like this podcast, please subscribe. You can hit that alarm bell. Also, share it with friends, family, and colleagues. But we wanted to give you a quick review of what we saw in the month of July, not only from an equity market perspective, a bond market perspective, but also from an economic standpoint. So let's dig in very quickly. The S&P 500 itself made 15 record highs for the year in the month of through the month of July. We saw that not only the Russell 1000 or that S&P 500 index, both these large cap indices, they've outperformed their value counterparts, and that's been because we still get this momentum trade driven by AI, but also we kicked off earnings season, which this earnings season for second quarter is coming in much better than expected. We did get some information from the labor market that the labor market continues to weaken, so there's this optimism that the Fed will be able to cut interest rates in September, so that also boosted that growth trade over the value trade. We did see that the U.S. markets outperformed the international markets for the month of July. And a lot of that has to do with the fact that the technology sector is very heavily weighted in the U.S., more weighted in U.S. equities than in the developed international. And since it was a lot of a tech trade, that did help U.S. equities over their developed market counterparts. When you do look at the bond market, we saw bond markets relatively muted for the month. There was this tug of war between some mixed inflation data and then some weakening economic data and what that might mean for the Fed. So bond markets did produce some modest returns here. When you look at the commodity side of the market, this is we saw the commodity index. It was down for the third time in the last 4 months. That was primarily due to the industrial metals. A lot of volatility around copper prices. They fell the most since June of 2022, and that was because of tariffs and this back and forth and getting a little bit more clarity around what the tariffs do mean. The dollar, it actually did appreciate for the first time this year, and that was driven by some of the positivity around trade negotiations towards the end of the month as we approach that August 1st deadline. And we got some trade deals, at least frameworks, put forth from some of our key allies. That's all we have today. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.